right. Thanks for joining Next Level Up. And our guest today is Paul Brahe. He's really an amazing story. Can't wait to dive in. How you doing, Paul?
I'm doing great, John.
All right,
Thanks
great.
for
And I
having me
love
on.
this. Love the Stanford jacket. I'm jelly. So as we kind of go with these podcast episodes, let's just jump in a little bit of history. Like, how did you get to, what was the past to get you from there to here?
Yeah. So I guess, like my jacket, I'm a Stanford grad. I worked my way through school as a programmer and a musician, played
From
guitar,
Stanford? What?
and
I've never
yeah.
heard of those guys.
And it's funny. Stanford is one of those places, like some of the big colleges, where you don't know how good you got it until you're already out. And I definitely
Hmm.
was that way. So I could have taken far more advantage of it than I did. But
Yeah.
I had always I ended up getting a degree in economics and communications, and the economics was focused on econometrics. So I wasn't really headed down the tech side, but I was a
Yeah.
programmer, and that's how I worked my way through school. So very early on, I was programming in some very early stuff, and
Yeah.
so you know I didn't go that route at Stanford. And it's funny because at the time Stanford had computer programming, but it really wasn't that big yet.
Yeah.
It was basically before the internet really took
Right.
off, before anybody knew what the internet was. And so after being at Stanford for those years, I actually jumped into the finance world and went to work at Merrill. Um, and I always said I was never going to get into finance for sure, even though I was the economics guy. But they recruited me out of school, and I think I was the youngest at the time, the youngest broker they had in almost probably in
Wow.
history.
That's impressive.
And I worked with Merrill for a couple of years on a little bit on the sales side and then a little bit on the research side. But um, I didn't like it.
Yeah.
I figured out really early on I was never a big company guy. And Merrill is a big company, and they're very structured, and
Yeah.
that's how they are. And nothing against them, because it obviously worked for them, just never worked for me. So I was there for a couple of years, and then decided to go off and do something different.
Yeah. I got that.
And
Same for me for
that
Ernst and
different
Young was
thing,
not my
yeah,
thing. That different thing was.
yeah. I mean, the different thing was while I was at Merrill, I ran into a couple of guys who were in the hedge fund world.
Hmm.
And this was very early 90s and around 91. And they were starting up a new fund group, just the two of them. And they invited me to come along. And we were in San Francisco, and we basically started, my two partners and I started, and it was called Apodaca Johnston Capital. And one of my partners, Scott Johnston, was kind of an old timer in the business. He trained some of the best portfolio managers there ever was. He was an amazing
Wow.
guy. And then Jerry Apodaca, who was the other partner, was just unbelievable at fundraising and really working with that side of the business. And he grew into being a good portfolio manager also.
Yeah.
And the only reason they wanted me along was because they both knew that technology was, getting ready to take off, and
Right.
they wanted somebody who could understand it. And you know, I
You were
understood
that
what I was
guy.
doing. Yeah. Even though at Merrill I had
Yeah.
nothing to do with that side, I really got it. And it was a very interesting time in San Francisco around 91,
Yeah. I
92,
bet.
because tech
Yeah.
hadn't taken off yet. There were no tech bankers yet.
Yeah.
Um,
The bubble was just starting to be a future thing, maybe question mark.
yeah, I mean, so, there was analysts on Wall Street covering IBM and early on Intel, but
Yeah.
it didn't really, nobody understood it. And that's
Right.
why when we started our firm, which was basically the money out of our pockets, we started and had a couple of $1 million under management. And
Mm.
we had some really good years, and we were really smart about things. You know,
Nice.
Scott Johnston was kind of the guy who invented momentum investing, and he taught some of the big guys. I mean, so he knew, how to get in and out of stocks quick. He knew how to, invest in real growth. And
Yeah.
again, that was really, it was a new thing. And so that put that together with the technology companies that were about ready to explode, and we had a real opportunity.
Yeah.
Now we did more than just tech. We did, basically almost any field that looked like there was a lot of growth in it, but tech was it. I mean, we being in San Francisco, it was such a small, tight community. We quickly became really good clients of the big firms there: Montgomery Securities, Robertson Stevens, Hambrick and Quist, Volpe Welty. My partner Scott Johnston had relationships with them because he trained a lot of the guys who were the higher ups there.
Came
But
from there. Yeah.
the way we would move stocks and trade, every broker wanted us as an account because they don't care about anything except the activity and volume of trading, and we
Right.
traded.
Yeah, I bet.
So we kind of married that our strategy of looking for growth companies with my interest and background in tech.
Yeah.
And these firms started bringing these IPOs, in those early 90 days of all the tech guys. And honestly, as most of them had analysts that didn't know what they were doing. And there was a few of us on the buy side who were, like me, that some of these small shops had some very smart guys in it. And we kind of helped, I really feel we helped the sell side understand what they were bringing to market and what the real growth opportunities were.
And where they were that they probably didn't see it otherwise.
They just didn't understand because
Yeah.
at that time there wasn't, even on the healthcare side too, the firms, those big firms, the local ones as well as the national ones, they weren't hiring analysts who specialize in areas. They were hiring finance guys and then trying to turn them into analysts. It hadn't changed yet, to the point where
I assume the next stage, unfortunately, was that they started figuring that out. Oh, there's our internet. One of us is not happy. That me or you?
Hey, John, I lost you.
Okay, I think it was me this time. All right, so I assume the next level was they then started figuring out what you guys were doing and started learning to close the gap.
They started trying to hire analysts, not only on the tech side, but the healthcare side too, that were guys from the industry, and then, try to turn them into analysts. And that was really the way to go. But in that meantime, us kind of being involved in not just our firm, but there were some really good small firms at that time who were just starting to grow like crazy. We were getting involved in those deals, and, they would go out to some big buy side firms and say, well, we're bringing this tech deal. And they say, yeah, we're kind of interested. And all the small guys in town, we were like, no, we'll take everything you'll give us on the IPO. We'll take, give us everything. And so that started, we kind of, I don't know if it was good or bad, but we started the whole idea of flipping IPOs, where we'd get some and, turn some right back around to trade them. And obviously that was, anyone who knows the finance tech business knows that was a very it was a very profitable way to go. And it went crazy for a few years. So we were getting some good allocations, and we were learning a lot, and we had really good relationships. And it was a fun time in those kind of early mid 90s, especially in San Francisco and all over Wall Street. Yeah.
I look back to them, and any, on that kind of upside of the Gartner curve, right? Any of those innovation days are always fun. Yeah. It never hurts when you're putting money in your pocket on top.
Oh yeah, absolutely. And you know what? It wasn't hard at that stage. I mean, really, it was just the beginning of the curve. And, some people saw it early and some people didn't, but it was one of those things that unless you somehow came out of that tech world, you just didn't understand what was coming. You didn't see it.
Yeah. Yeah. Understood. So where does that lead us to today? What are you up to today now that those days are over?
Yeah. So after we ran that fund and we got up to, almost $1 billion, which back in those days was a lot of money. Now that's the starting point. Back then, that was big. I went off with our trader, and we actually ran a small brokerage firm in San Francisco, an institutional brokerage firm. Um, can't tell if we're frozen up.
Yeah, you're good.
Okay.
Keep going.
Yeah. So we
Nope,
were running an
you're good.
institutional brokerage firm in San Francisco, and we did that for a couple of years. And that firm we ended up selling off to FEMAT, the French bank. And at that point, I started doing what I'm doing now, and it's been 20 years. And I kind of just hang out a shingle and find deals I like doing and people I want to work with. And that over the years has been everything from did a long stint in oil and gas services, started a couple of funds and a company where we were in the oil and gas services business out of Texas, and a bank holding company where a very good partner of mine and I had a bank holding company where we were buying pieces of banks, small banks in the Midwest, mostly around doing the real estate business, off of them, especially when things crashed. Still doing a lot of tech deals because I'm just a software guy at heart, especially in cybersecurity, which is always been my kind of specialty and what I love doing the most.
Nice.
And even some restaurants. So I'm a big believer in finding companies that I really have an interest in and seeing if I can help them and make a change in it. And also finding guys I like doing deals with, because I'll do deals with the same guys over and over again if I can, because I trust them, I know how they operate, and most of the time, things don't always work out perfect, but most of the time, it works out well, and I know, I can trust those guys.
Yeah, and those almost always also feel a little bit more like win-win, right? Because you guys, again, everybody knows what they're trying to get out of it. I understand that relationship and why you want to go back to that well over and over again. So
exactly.
when we were talking on our first call, like one of the things that I think is, at least from what I hear, is one of your superpowers is like, again, like with the bank and real estate you were talking about, and you don't have to go into the details of it, but how do you see, it really sounds like you're good at seeing the gaps where there's an opportunity, right? Something's underserved. Maybe there's intellectual property that's not getting monetized as well as it could. Talk a little bit about that. Where do you think that came from? Is that just, God given? You just woke out and that's just you always done that, seen those things, or how do you do that? Some people don't have that skill for sure.
Yeah, no, I mean that particular thing, it was definitely learned. It was over, one of the things if you're a good analyst, which I consider myself a research dog more anything at all. I mean, I dig and dig and dig. Is if you're doing research on companies, if you're not actually learning something about how business works and the world works from these examples, then you're missing out. It's not just about, this company's doing this and this and this, and this is the result. It's like, okay, why does this work in this situation? Why does it not work in that situation? So you have to look at the bigger picture. And so as, I looking at thousands of companies over the years, one of the things I always like to find is stuff that was out of balance, stuff where there was opportunity for doing things like rolling up industries, which I think is a good thing. A perfect example is actually our oil and gas services company. We were actually in the water reclamation space for oil and gas drilling. And at the time we were getting into this, it's an extremely important part of the oil and gas process. Not many people know about it or understand it, but it's a multi-billion-dollar business. And when we looked at Texas in particular, it was a mom and pop industry where there was, 30,000 of these water wells, and no one owned more than 4 or 5 of them. And it was a critical piece of business. So we went in, started funds, found a great operator there in Texas, because if you're doing business in Texas, you better have your guy on the ground. And we raised money and rolled them up and operated them better than anybody else. And we put together a big portfolio of these things and ran them for a decade and kept going, and eventually sold that portfolio off to Pilot which is the big oil and gas company.
Yeah.
But it's those kinds of opportunities where, I mean, how many times do you find a multi-billion-dollar business where it's all mom and pops, right? I
And
mean,
just sitting there. Yeah.
yeah. So the same thing can happen in just about any industry, even tech still. But you kind of have to see those opportunities as they come. But it's really about trying to look at everything you've done in the past and recognize the patterns, which, that's what it's all about, recognizing patterns.
Yeah, and I think one of the things the reason I call that a superpower for you, that at least how I see it, is status quo, et cetera, can be, inertia can be a real bitch, right? Like it can,
Yeah.
just because you've been successful, a lot of people just don't think about either byproducts or other areas. Do you have any advice on like ways that you can look for those anomalies or areas for, or is it just somewhat your amount of expertise and how many times you've seen it to be like, oh, look at this. This is interesting.
Well, again, I think one of the ways you do it is you always have to have an open mind about things. You have to be a student of the game. And I think anybody who isn't a student of whatever game you're playing, you're missing out, because if you think you know everything, then what's left to learn? And one of the things I love doing is I love learning all the time. And that was always the fun thing for me as a Wall Street analyst is, we'd sit in our offices and we'd have 10 companies a day coming through telling us about the company and everything else. And what an exciting way to do business is learning about new things all the time. But you can't sit there thinking you already know everything about it. And a lot of people, especially if you're running money or you run a large investment banking firm or whatever, you might think you know everything because you've seen a lot, but you don't know everything. And I think that every time you have a conversation with somebody about their business, there's so much potential to learn something new from anybody. I mean, I was looking at a deal recently, an AI company, of course, doing sales systems with AI for car dealerships. And I talked to, one of these big dealerships out of Florida, and just understanding how he deals with his sales department taught me new things about, how AI and how technology can interact between these companies and people, which, I'm not a sales guy. So that for me was something new, but you have to be curious. You have to be a student of. There we go. So yeah, I mean, I think
the good news is Fathom's here, so just keep talking. So even if my internet, anybody watching, my internet is being a butt today, so I was just working through that. No, I think that's one of the places where I feel like we're cut from the same cloth, right? I've got to my mantra is the only time I'll stop learning is when they put me in a box.
Yeah.
And put me on the ground.
It's fun too. I mean, it's fun to learn new things, right? So, I mean, there's areas that I still haven't really dove into. I've got somebody that worked for me as an analyst years ago who was in the healthcare space, she was brilliant. And every once in a while, I pick up the phone just to talk to her and say, hey, tell me something new. Tell me what's going on with you. Tell me something exciting. And she's always got something like crazy that's like mind blowing. And so it's always I just try to be curious and try to be open-minded and try to make connections with people that I generally might not be, somebody in my Rolodex or somebody who would be a natural fit to talk to.
Yeah, I mean, again, not that it's good or bad, but for me, the upside of that is it opens up the door to possibilities you'd otherwise kill off because to your point, something, or these guys aren't our dudes, or what, like, you don't know.
Yeah.
Like, let's just, what's the harm in a conversation, And sometimes that gets me into trouble because, people are like, you should focus on blah, blah, blah. But yeah, I hate picking verticals for that exact reason. I've done supply chain management. I've done logistics. I've done things that I would have never otherwise had the opportunity or interest in. Then you just get into it and you're like, oh, that's kind of cool.
Yeah. Oh, I was
and then
never
some of them suck.
Yeah, I was never an energy services guy. I was never an oil and gas guy. But my partner, who I was doing the banking business with, he actually changed the game in the propane business of all things. He and one of his relatives were the first guys to automate the process of cleaning and refurbing those barbecue propane tanks. He was the guy.
Got it.
And as I talked to him, and he talked me about how the history of him doing that and building the plants and doing that, and I understood. I'm like, wow, that is really cool and creative way to think about it. And then we ended up doing the oil and gas service game. I never would have touched it until he's kind of sparked my interest. So
Yeah.
it's all about just trying to be open-minded and look for something fun and new. And I'll tell you what, oil and gas in Texas, that was a tough business, but you know what? It was fun, exciting, and now that show Landman's out that everybody sees,
Yeah.
that's the kind of
Like,
stuff that we were doing, and it's
yeah,
yeah, and all the stories in that show are probably the light versions.
that's awesome. So talk to me in the last couple minutes here. What do you
Yeah.
see as the future? What are the things you're looking to create? What are some of the obstacles you think you might have to hurdle, et cetera?
So I think fundraising for companies has gotten difficult. There's a certain type of investor out there that they throw a lot of money at just these big ideas, and there's a middle ground of companies that really are having a tough time getting funding, that are really good. And I think that there's got to be a way to educate some of these bigger investors to do things in a different way. This AI boom has gotten nuts. I mean, there's some great companies and there's some really bad ones. And not even getting into the ethics of AI or anything else, just it's again, it's another one of these booms where there's so much crap out there that unless you've been in that game, which some of us, I mean, I was dealing with AI machine learning for the last 35, 40 years.
Right.
We kind of see through some of this garbage, but I think that obviously AI is the future, but trying to find the right ones and trying to find something that makes sense is getting difficult. And so the stuff that I'm getting involved with, I'm looking for stuff that is thoughtful. And I just don't want, I wouldn't throw money or time at something that just is another tag along. I want something different. So educating investors about this space right now, it's like yelling into a windstorm.
Yeah.
But small companies are going to have to find some new ways to raise money. And as much as I've raised a lot of money over the years, sometimes finding the smaller amounts of money is a lot harder than finding the big amounts of money. And there's some really good companies right now that are kind of in the desert. So again, obviously AI is a place, and there's a company that I joined the board of that we're raising money and we're going through development right now that's small in the AI space called Parsley 360, that's doing what I would consider some really good ethical AI work, focused on the HR space for enterprises. But the tech we've got underneath it is what really drew me to it, because it's a huge idea underneath it, and it's kind of wrapped up in this great HR app, but the technology underneath it, someone making an investment in this thing, including me, is getting getting a free ride for some really great tech at the price of a good app. So
Nice.
so that's one thing I've been playing with. Been doing some work in a space that I did, again, another one I didn't think I would do a lot in. I've got a very good friend and a partner of mine who does a lot of work with franchises and franchisees. And there seems to be a big boom, and he saw it early on, of a lot of the younger generation looking, obviously not for corporate jobs, but looking for kind of a bunch of small businesses. So instead of
Yeah.
having one big corporate job, they're telling their parents that have money, say, listen, buy me a few small companies, build me a portfolio of companies. It makes a lot of sense, and I'll run them. And you know what? As I see what's going on, and I see what is happening in corporate America with AI taking over a lot of those entry level jobs, it's booming. It's a really interesting idea.
I'm gonna leave this.
Right there.
We'll edit this in because it's always funny to me to have two technology guys get screwed by technology all day long. So Paul's internet at the hotel is also going in and out. But anyhow, you were
Right.
talking about
So,
how, to your point, it's like,
yeah.
coin
So
ops
again,
and that kind of stuff, you name it,
well,
right?
it's really, I mean, the franchise industry for, it goes through waves like everything else where there's good times and bad times. But the whole
Yeah,
idea of creating a portfolio of small companies to run and looking for, instead of looking for massive investment gains as an asset class, looking for cash flow. Cash flow is king. I don't care what
yeah,
anybody says. Internet booms are great, but cash flow is king. And that's one of the reasons I like the oil and gas industry is pure cash flow. So this whole idea of putting together portfolios of these franchise companies, at first I didn't really have an interest in looking at it, but now I see it really works, and so that's another area that this partner of mine has done an amazing job on doing this whole idea of kind of moving, especially moving generational wealth along. So instead of somebody just dropping a portfolio of millions of dollars of stock into a kid's hands, you're dropping
right.
portfolio companies. And
Yeah,
I love the idea. I really do. Like put the kids to work, give them something to really, do operationally and give them experience and everything. So
yep.
that's something that is something new to me that I've really kind of enjoyed. I'm enjoying learning about.
Yeah, I love it. I'm working with a guy in India right now that we're talking about micro acquisitions for the same, just small companies that are only making maybe, 2,000, 3,000 monthly recurring revenue on a SaaS model, et cetera. Same thing. Like they'll just roll it up, have somebody operate them, see if we
Yeah.
can't grow it. So yeah, I love that
Yeah.
philosophy. My kid wants to be a pathologist, so I think we're out, but I keep trying to convince her to maybe. Because it's the same thing as I want to build this thing up
Yeah.
and to your point about generational wealth is hand it off and say, here you go.
Yeah.
Here's your
No,
68 companies. Keep it going.
I mean, looking at that this franchise model gets really interesting because some of these franchises are some of the jobs that AI can never replace, the trades. You start
Yeah.
looking at plumbing, electrician,
HVAC. Yeah.
stuff like that. Yeah, right. And so this whole model of building these small companies around those trades too. I mean, those, I heard, in fact, a woman named Nicole McMacken who runs this huge IT staffing company out in Irvine, ITC. I heard her say yesterday, and she's told me before, the new millionaires are the tradespeople,
Yeah.
plumbers, the electricians, HVAC, like you said. I mean, they aren't going anywhere. In fact, the demand for
No.
them is shooting up like crazy. So
Yeah.
there's
It's
going to
one
be a
of the
weird,
few good.
no, I was just say it's an interesting intersection of old school and new school, right? New school
Right.
thinking around those business models, but old school abilities. And that's,
Yeah.
that's something that, you don't gotta have to go to Stanford or Harvard to do. You don't have to get an MBA. You just have to have a little interest and put in some hard work.
Yeah. Yeah. And find the right people to your point. My brother-in-law is an electrician and, some people look at their nose and say they bought himself a job. I'm like, it's a pretty good job.
Yeah,
It's recession proof, right? I mean, it's like I
yeah.
can't really blame the guy just because he doesn't want to stack employees up and deal with overhead and everything else that goes with that.
Yeah. Plus, you're your own boss. I mean, if as long as you got a little bit of self-control and can show up to things
Yeah,
on time, you eat what you kill. You make your own life. And for
yeah,
me, that's one of the things that early on that Merrill taught me is like, do you want to fit into someone else's business model, or do you want to create your own? And creating your own doesn't make it easier. In fact, it's almost always harder. But at least you're your own person. You're doing
yeah,
what you want to do when you want to do it, and nobody can tell you any different. And you know what? When it gets down to it, what we're all trying to really get, it's not about making money, it's about freedom of
yeah.
choice. And
And
that's what, for me,
fulfillment,
that's
right? All those
important. Yeah,
100%. I
absolutely.
mean, I'm a big Ikigai guy, right? So it's like same thing,
Yeah.
intersection of all those things. And you don't have to do what I do. Same thing with my kid. I'm like,
Yeah.
you don't have to take on dad stuff just because, if you want to, that'd be cool. But
Hey, I told my kid,
not gonna.
my son is a chef, and that makes me happier than anything else. So
I bet it. Especially if he's halfway good, right? It's like, feed me,
hey,
please.
he's damn good.
All right, Paul, I really appreciate the time. Is it just out of curiosity, if somebody sees this thing and is interested in some of the stuff you're working on, what's the best way for them to get a hold of you?
Boy, I don't really do. I mean, I have presence on social medias, but I'm not really a outward facing guy. But my email is paul@tiburonresearch.com, which is my company that I've had for 25, 30 years. And that's usually the best way to reach me at any time. So again, paul@tiburonresearch.com, and I'm sure you can throw that in show notes.
Yeah, we'll do. We'll
And
definitely will.
yeah,
Well, man, I really
so
appreciate it. And good news is you're also repping Stanford well. As good as the people are that usually come out of that school, the one thing I've generally found is you're not the typical asshole ego person that some other schools produce. So appreciate it. Appreciate the time, and I wish you all the success in the world, man.
it was a real pleasure, John. I appreciate it.